Welcome to Waypoint Real Talk, where we discuss real estate and your home. Let's get started with your hosts, Aaron Shishilla and Austin Hines.
Everyone, and welcome to the Waypoint Real Talk podcast. My name is Aaron, and today we actually have a really special podcast for you because we have on the one, the only owner of Waypoint Property Inspection, Bob Hines. Bob?
Hi, everybody. Thank goodness the one and the only. But even more special today is that we have a special guest, Michelle from Southshore Insurance Professionals. Now, Michelle Mosher owns and operates Southshore Insurance Professionals, servicing the Brandon, Riverview, and surrounding South Shore community with the ability to help residents in all of Florida. Harnessing the experience of more than 26 years in all aspects of insurance, Michelle brings her knowledge and dedication to educating consumers on the coverage and protection they need. Now, Michelle shows a passion to give back to the community as well, which she and her husband, Todd, and her stepdaughter and their 2 dogs now make their home. Michelle was the 2019 president of the Greater Riverview Chamber of Commerce, currently is the treasurer of the South County Spartans Athletic Program, and the vice president of the Project Lotus Restoring Dignity, as well as spending time in other local business and civic organizations. Now, Michelle and I have known each other for well over 15 years now. We basically grew up in our businesses together, and I can say in addition to being a great partner of Waypoint, Michelle has also helped us personally and with our business insurance needs. So welcome, Michelle.
Thanks, Bob. Thanks for having me.
You have some really awesome accolades.
Thank you.
I was really
started when I was 4.
When you were 4 in insurance, you were sitting at a desk.
I was.
Nice. Writing, let's see, what do we have today? Hurricane deductibles.
Yes.
They
didn't exist back then.
They didn't. Okay.
But they do now, and that's what we're going to talk about.
So what is a hurricane deductible? Why did they start then?
So hurricane deductibles started, probably 10 or 12 years back when we were hit with all those hurricanes back to back to back. Used to be that your hurricane deductible on your homeowner's policy was just like a regular claim. And when something happened, you paid your deductible and you went on. Well, in 2004, we were hit 3 different times with 3 different hurricanes, and people had deductibles for all of those things. So they instituted some new statutes and legislation at the state level and decided that we would have a policy level hurricane deductible, which is a calendar year deductible, works much like your health insurance. So it's one deductible that you pay for hurricane damage throughout the year.
Okay.
To start, and we're going to kind of dig a little further into that, I think, as we talk.
So is that calendar year for the full year, or is it just for hurricane season?
For the full year, but hurricane season does run, all the misnomers out there, we'll get that cleared up. Hurricane season runs from June 1st to November 30th. A lot of people think it stops in November, but it does include the whole month of November. So
Gotcha. So how much is the hurricane deductible? I guess it depends on, a multitude of factors depending on your home, right?
Typically, the homeowner's deductible or the hurricane deductible on your homeowner's policy is 2% of your dwelling coverage, and that's whatever you're insuring your home for.
Okay.
So in our agency, we do a calculation to determine how much it would cost the insurance company to come back in and rebuild your home, like, kind, and quality. Whatever that number is, the hurricane deductible typically is 2% of that number.
So what's the average coverage, would you say?
I think in this area we see anywhere from $300,000 to $500,000 with all the new construction going on. Of course, people aren't spending necessarily $300,000 to $500,000 on their home, but they're building in these neighborhoods where they're building 20, 30, 300 houses at a time. When an insurance company is looking to put back just one home, it takes them a little bit more money to be able to do that.
Right.
So when we calculate that stuff, if your coverage level is $350,000, your hurricane deductibles, then $7,000 a year. That can be a pretty substantial hit to somebody's savings account. So we try to make sure that they understand what that is and what kind of options they have if they want to do something different with it. But that is the hurricane deductible.
So if they have any kind of damage during a hurricane and they want to go through insurance, they have to first pay, for instance, $5,000, and then the rest will be paid by the insurance company.
So if their hurricane deductible is $5,000, they're going
Right.
to pay the first five, and the insurance is going to pick up everything after that.
Okay.
If all of that happened in one storm, then the next storm that might happen to hit us would just revert back to their regular policy deductible instead of having to pay $5,000 all over again.
Right. So the deductible for the hurricane policy is once per hurricane, and then if you have another hurricane in the season, so what you're saying is then it applies to the regular deductible.
Correct. Unfortunately, it's not just one hurricane deductible and that's it for the whole year. That would be great. But
If you get a third one, then do you have to, it's free?
no,
You have to pay the deductible again?
pay the deductible again.
What the heck?
It
right.
could be expensive.
All right.
But let's hope that doesn't happen. I mean, it could. It has happened here before. And it's 2020, so let's hope that we're not borrowing any trouble.
Anything can happen in 2020. We've
That's for
learned
sure.
Right. So we talked about like what it is, and that's when they go with anybody. How does their wind mitigation affect this, if at all?
So wind mitigation inspections can help bring down their premium, but it doesn't really do anything from a standpoint of helping them with their hurricane deductible.
Okay.
The replacement coverage is the replacement coverage, and the deductible is percentage-based typically. There are some companies that offer, flat hurricane deductibles of $1,000, but you pay for those. Lower the deductible, higher the premium. So typically people opt for the 2% deductible and just kind of have that in savings. And then we also have a way for them to avoid that with a different kind of policy, but that's not what we're talking about today.
Right. How do insurance companies, I'm sorry if I'm getting a little bit off topic, but now I'm
good.
kind of like curious about it. How do insurance companies vary based on, I guess, coverage, but then also deductible? Because could you pay, I guess, a higher premium, but then less of deductible?
Absolutely. So in our office, we write with about 25 different homeowners insurance companies. They all have their niche. Some are better with older homes, some are better with newer homes. Some are better depending on when you're in Florida and you build a 2-story home, typically the upper story is frame construction and the bottom is masonry. Some of them give us a higher credit of the percentage of the masonry and frame. So we really kind of do our due diligence in the agency of finding out what's going to work the best
Right.
from a standpoint of finding them the best options. And then we talk about once we get there, and typically we quote the 2% deductible because they don't get a credit or a charge for it. And then we just kind of look at, what works best for that particular client. First-time home buyers, we try to maybe help them look at a lower or a flat hurricane deductible because a lot of them don't have $5,000, $7,000 in savings, or they, once they close on their house, now they want to go do all the stuff that we all want to do when we buy a house. And it's hard to think of, but, I closed on my house in June and it's hurricane season, but as long as we don't have any storms, then we're great. But if we do, then where's that money?
Right.
We want to make sure that whatever policy that they have, they're going to be able to afford to use it if they have to.
Right. Okay. And feel free to jump in whenever you're ready. You don't have to.
Whenever I'm ready.
Whenever you're ready.
I'm learning here too. Learning a lot.
I just didn't want that conversation to be.
No.
But so I have a question into when it applies. For instance, you mentioned to me earlier that when you get a hurricane to come in and it rips off, say, a couple of shingles, you should still go through insurance with that.
You should. So one of the things that we educate our clients about is, let's say it's not a hurricane, but maybe you have a kitchen fire. And maybe it's just small and it's under your deductible, or it's just over your deductible, and you think, well, is it worth filing a claim for? We're going to have a conversation about that. Maybe it's not. But the hurricane damage, every single time, I will tell you, it's absolutely worth it to file a claim. So because we talked about how it's kind of like a health insurance deductible, you wouldn't go to the doctor 10 times and not ever turn that into your health insurance because you want credit on your deductible for it. So you're always going to do that. If something happens at your house, you're missing a few shingles, you have to pay somebody to come and have those replaced and all of that. But we want you to log that with the insurance company so that you can then turn in your receipts, and that comes off of what you owe for the next storm if there is one.
So when that comes around, is that just you take it off your receipts? And like literally when you fix something, I guess you have some shingles that are ripped off. Oh, I got to hire a roofer. You hire any roofer you want. He comes out, he fixes it. You get the receipt, the invoice from him, and you just send it off to the insurance company.
The insurance company will come and do an estimate as well. They'll come and, verify the damage and log everything. And the duty of repair is going to be on the homeowner to have all that stuff done. And then the insurance company will track that.
Okay.
So if you've got a $5,000 hurricane deductible and you spent $1,000, we want to make sure that you don't have to pay $5,000 at the next storm. You really only owe $4,000.
What if,
Michelle, a question, because obviously we deal with the same clients.
Sure.
And there's a big fear out there, and I've shared it in the past as well, is even one little claim or one small thing where you're paying the money as part of your deductible, so the insurance company is not paying the claim as of yet. They feel like anything, it's kind of like auto insurance. Even if I call, then all of a sudden a red flag goes on my account and I'll either get dropped or my premium will skyrocket.
So that doesn't happen specifically for wind, hail, hurricane type claims. Those are Mother Nature events that we can't control. If you filed a broken plumbing pipe claim and a fire claim and something else all in the same year, yeah, they're going to start to look or pay attention. Higher valued water damage claims, they'll look and start to pay attention. But when we're talking about hurricane damage, there's no backlash per se, or recourse from the carrier on that. It's a wind event as far as the insurance company is concerned, and
I think it's the perception out there that it may be, because it's not anything that they control. Right. But if they make that call, then all of a sudden their account is flagged.
Absolutely. It happens. And you're right, it happens in auto insurance and other lines of business as well. So people are, I think, a little bit hesitant to do that. So we try to educate them as to, we want you to make sure that company knows, hey, this is what happened and this is what I did. But if you never told them, then they don't have any idea to know to credit you for the next time.
Right.
And I'm sorry.
When we're talking about getting like the penalties or the red flag, as you put it, on your insurance policy, to kind of summarize it, it's kind of like if your home just does it on its own. So a roof leak happens, but it wasn't a Mother Nature event. Your plumbing starts to leak underneath the slab and you have to rip up the slab, whatever it is. It was your home that did it. It wasn't a freak nature event.
Correct.
Okay. So in the term of hail, in the term of hurricanes, wind events, you should always go through the deductible or go through insurance, because there's no, is that across the board with all insurance companies?
In my opinion, yes.
In your opinion?
Yeah. I mean, I can't speak to the companies that I don't write insurance for, like captive insurance type companies. I don't do that. I would assume that they would be educating their clients the same way. I think that's one of the big things that we do, is educate our clients on what they do when a claim happens, whether it's a wind event or whether it's a fire at 2:00 in the morning. Here's what I want you to do. The agent relationship with the client, I think, is important to be able to understand, what do I do when I need it? Because it doesn't matter until you do. I've had your insurance for a long time. It hasn't mattered yet.
Right. It's 2020.
It's 2020.
He's not reporting the leaks.
Could be. So it doesn't matter, because he's paying to fix them and nobody's after him. Right. But at the point in time when it matters, we want to make sure you understand, this is what you have, and this is how we talked about how it's going to work, and this is what you can expect. Certainly claims aren't fun for anyone, but there's a process, and we're there to help educate through that process. And my education line is, file the claim.
Right.
So along the lines of, along the lines of your deductible, your premium, your deductible, what qualifies for your deductible, there seems to be some confusion out there between, my house is covered for wind damage and subsequently water damage due to wind, but unless I have coverage, it wouldn't be covered for flood.
That is correct.
Right.
So there is a distinct determination in coverage line. Water rising from the ground, that's normally a naturally dry area that extends your property and an adjacent property, or if you're on acreage, it's got to be continuous acres. That coverage is only available either by an endorsement to a homeowner's policy, which some of our companies have, but not all of them, or a separate flood insurance policy. So in a wind event or hurricane event, if heaven forbid the roof rips off of your home and water comes in from the sky, that's covered. But if water's rising up from the ground, comes in your sliding glass door, comes in your front door, sometimes wind-driven rain through windows and things, and cracks and stucco and things like that, those things could potentially not be covered.
Storm
without the
surge.
flood. Correct. You got it.
That's a very good point. Right. Yeah. Okay, so getting into the part of wind mitigation, I want to just touch on this a little bit.
Sure.
When we're shopping for insurance, how would you go about homeowners looking at insurance policies? Because from what I understand, they take their wind mitigation, they go around and say, okay, I need an insurance policy. And in my head, it's like, whoever's going to give me the cheapest amount. Why should somebody choose you over anyone else? What makes insurance companies differ? Because, I mean, you mentioned it's like 25 companies that
Sure.
you use.
So I'm an agency, and we represent 25 different companies. So the reason somebody would use us versus somebody else is because we give you options and choices with those 20 some odd different companies. Our process is to collect all of the information, including wind mitigation inspections, so that we make sure that we're quoting a policy that's something that we can actually write if you choose to move forward with it. And a lot of times we see that, we'll compare something to another quote that we've received, and it's based on the selling price. And we talked about, in the beginning of this, we talked about that replacement estimator. And that's not always the selling price. That's market value, not the reconstruction cost. So we do a due diligence in our agency from start to finish. The quote that I give you is a quote that we can bind, and nothing should change as long as you've given us all of the accurate information when they run claims history and things like that. I think that's what makes us a little bit different is some people just pull up the house and they say, okay, well, the selling price is $225,000. That's what I'm going to insure it for. And when I do my replacement cost estimator, maybe it's $310,000 because of location, which I'm not taking into account, but I'm still taking into account your pool and your screen enclosure and all of those other things where maybe they just took the price.
And I can attest that you actually did. We've been together for so long as you actually did that with my house a few years ago because of the, I guess the difference in replacement costs over
Right.
the years too. Is I found out that I was underinsured.
And we find some of our companies offer what's called an automatic inflation guard, where they try to keep pace with inflation on that dwelling percentage or that dwelling number every year. Not everybody does. So every couple of years, we just want to reach out and make sure, like, hey, did you add on 1,500 square feet for Austin to live in? Or did you take it away so he couldn't come back?
His mom's working on that right now. I think
So then
the plans are
that's
in
going to change. Then we'll need to make sure we update everything when that happens. Sure. Did you add a second floor or a pool or something that we need to know about to make sure that when you need to use it, like I said, if you take your policy and you stick it in a drawer and nothing ever happens, that's great until it does. And at some point, especially living in Florida, we assume at some point something's going to happen. So we want to make sure that we're always up to date on everything that's going on.
Okay. Last question from me here.
Sure.
If, again, going back again to the purchasing a policy or shopping,
Okay.
What questions do I need to ask insurance companies to find out which ones are right for me?
I think one of the questions that you ask when you obtain your quote, especially if you've gone to a couple different agencies and you're looking at quotes, and that would be one of those things. If you're looking at a quote for $250,000 worth of coverage and $350,000 worth of coverage, well, where did you come up with those numbers?
Gotcha.
Why are things different?
Gotcha.
What things does that agency feel are important? My bigger concern would be that the agency that you're talking to is asking you questions about what's important to you. Your insurance needs and Austin's insurance needs might be completely different. You may have different assets to protect, or you may have a situation where you're renting part of your house out, or you might have a pit bull. And I don't want to turn that into into that conversation because that's completely different. But those are things that need to be uncovered. So we're doing all of that up front.
Gotcha.
So that when we give a policy quote, it's a quote that can be written.
So when you shop and you get the quotes, you should really break down the different pieces. You shouldn't just look at the numbers.
Absolutely.
But break down the pieces to find out what the policy is covering and the best fit for you.
Absolutely.
Okay.
Some people, I wrote a policy this morning where she didn't want any personal property coverage. I wouldn't write that policy. I like my stuff. She didn't care about her stuff. And she said, I don't care about my stuff. I don't want to cover that. Okay. But if I gave everybody that quote, they probably wouldn't be happy with it.
Right. Yeah, that makes a lot of sense. Okay. Well, I think that's it. Do you have anything else?
I have a few questions. Are we good on time? Okay. Just probably quick questions, and
Sure.
then I'll end it with a little bit more maybe detailed. What is pool cages, lanais?
Okay.
You work with over 20 companies. What would you say the percentage of them? Because I know sometimes people, there's two, actually we'll lump it together, pool cages and trampolines. Okay, because
Two totally different things.
two totally different things, but some people cover, some people don't. So
Correct.
let's start with the pool cages, because I know, I know some companies cover it, some don't. Maybe the reason why, and what would you recommend people get coverage on?
So let's put that misnomer out there and kind of finish that. All home policies include screen enclosure coverage for everything other than a wind event.
Okay.
So if your house were to catch on fire and your screen enclosure was destroyed in that, that's going to be rebuilt subject to the regular deductible with the rest of your home being rebuilt. The question comes into play when it's a wind event, and you have to have a specific endorsement for screen enclosures. The majority of companies offer a screen enclosure endorsement. It's not always inexpensive. When you're talking about, did we price it or did we not? When we see a pool cage, we price those because they're expensive. Nobody wants to pay to fix that. The majority of companies only cover, though, even on that endorsement, the framing and not the screen material, which is pretty much the first thing to go in a wind event.
Okay.
Some companies cover the whole thing, and they cover it just part of their base policy. I have two companies that don't even ask, or they ask, but they don't have an endorsement. It's just covered.
Okay.
Everybody else is by endorsement or no coverage.
Okay. So the second one is a friend of mine, a former coworker, put in one of the Facebook groups, and she was trying, it seemed like days, and I didn't go back to find somebody that would specifically cover trampolines.
So 25-ish companies. The majority of them don't want trampolines just because of the liability.
Sure.
I can remember being on vacation Christmas week. I got an email from a client that said Santa brought a trampoline. It's like, awesome. So Santa tell you needed a new insurance policy? Because we talked about it in September. They didn't have one. But she did think to call, and that was good. So I've got a handful of companies that absolutely won't take it. There's a few companies that will take it, but they'll exclude liability, meaning that if you've got a friend over and they're jumping on the trampoline and they fall and break an arm, your insurance policy is not covering that.
Right.
And then I've got a few that will give you a minimal, like $25,000 limit. But those are not the least expensive companies, so that's where you have to start to say, okay, same family doesn't have a trampoline anymore after March because the daughter broke her elbow.
Oh, wow.
Okay, so jumping into the trampoline topic. What if, theoretically, someone purchased a trampoline and just decided, oh, I didn't think to tell my insurance company. Whoops. What happens then, if nothing?
Likely the claim, depending on the carrier, likely the claim is not covered. That's the time when I like to hide on Facebook. Like, nope, I didn't see that. Scroll, don't ask. That wasn't your house, right? Typically, it's not covered. But if they had the trampoline when we wrote the policy, it is an underwriting question. So if they have the trampoline and they did not disclose it, that could potentially be material misrepresentation, which means the insurance company would reserve the right to go back and cancel that policy at inception, return the money, and have not provided any coverage. So we want to be truthful when we're answering the application. It's what happens after that sometimes we forget, and that's where we try to educate our clients. Like, if you've had any changes, we send out a renewal email every year. Has anything changed? Did you get a dog? Did you get a trampoline? Luckily, we don't see diving boards. I don't know if you guys
No, diving
do,
boards
but
and slides.
Yeah,
Yeah, I think years ago they were deemed to be harmful.
Yeah.
And that topic, then, you pretty much would only get dropped from insurance as if you lied on the disclosure.
Or forgot.
Or forgot.
I would venture to say a lot of people, especially young families, don't think that a trampoline that's going to be sitting in the yard has anything to do with their homeowner's insurance. I think it's a lack of education.
Yeah.
I think so too. Yeah. That's why, we go through we even have an online quote form that asks, that's one of the questions that asks, do you have a trampoline? Mm-hmm. Well, if you do, now we know that instead of 25 companies, now our list is narrower. Mm-hmm. And we want to make sure that no matter what happens, whether you've agreed that you're okay with no liability on the trampoline or a limited amount of liability on the trampoline, that we're putting you with somebody who will accept that and you'll accept what they're offering versus finding out Santa brought one and then scrambling to change it. Thanks, Santa. Yeah.
I've seen the newer versions, and it would be difficult in Florida because of our water table where they actually put the trampoline into the ground, so the actual trampoline is on grade, and they still put the cage around it,
right.
But it's less likelihood that you see it on the video shows all the time, the people bouncing on the trampoline and flying off through the fence or something. So I've got one more question,
Sure.
and I'll be finished up. As I was leaving my neighborhood this morning, a car passed me that was wrapped, and instead of telling you exactly what it said and giving away, it basically was one of those companies that said, come to us, we'll file a claim and replace your roof. So I wanted to get your opinion on that. And I know you have an opinion because I know they're out there. And I just think it's important for people to know. Actually, a neighbor up the street got visited by them a few years ago.
I remember.
You do remember. The claim was put in. The claim was denied. And then the insurance company said, replace your roof or we're going to cancel you.
Right.
So I may have just given the answer, but,
it
literally passed me. And I was like, that's the first time I saw that was so blatant on what they're there for. It was roofblank.com. I mean, it was like,
right.
You know exactly what they were there for.
So there are companies out there that really, for lack of a better term, they canvass neighborhoods where the homes are 18 to 22, 23 years old, where maybe roofs haven't been replaced yet. And we've had this come up several times. It happened in my old neighborhood. As soon as one person gets a roof done, then they're all over the neighborhood sites talking about how, their insurance company paid it and this is the guy you should call and he knows what to do. The fact of the matter is, once you file a claim with your insurance company, and especially roofs, because we're seeing a lot of fraud right now with roof claims, so much so that we've got one company who hired roofing engineers, and they don't have great reviews online because they've got a lot of claim denials. But their whole duty is to pay what they owe, not what they don't,
right.
To keep the rates in line for all of us. But they hired roofing engineers on these claims, and they paid what they owed. But if it was just wear and tear or lack of maintenance, and I think there's a thought in people's minds that they bought a 50-year shingle, and so that it should last for the whole time that they're in that house, but that's not true. So we've seen it, and Bob has a neighbor who had this experience. They called and they filed their claim. So now you've notified the company that you have damage to your home.
So do these roofers go out to and do like a roof inspection and say, oh yeah, the shingle is damaged this way, so it should be covered by insurance?
They say is hail damage.
Right.
Gotcha. Okay.
And if you let them on your roof, and I've seen videos of this, it's crazy. They have shoes that have things on the bottom of the shoes
like
that they
golf
can
shoes on a roof.
Walk and make marks.
That's cool.
Which is how the engineers have found that, no, it's not hail damage. It's some dude that walked on your roof that damaged your roof.
Sorry.
So, no,
We're
that's
always
okay.
looking for new revenue streams.
There you go. So once you notified the company that you have damage, you have a duty to repair. Uh-huh. So if they come out and they investigate the claim and they say, sorry, Bob, it's a 21-year-old roof.
Yes.
It's not damaged from wind. It's old and it's a maintenance issue. And maintenance issues aren't covered on your homeowner's insurance. So, hey, thanks for letting us know you needed a new roof. Maybe you should call a different guy and go ahead and replace that, but we're not paying for it. Mm-hmm. And so you're right. It was, you put yourself, and those companies that do that put unsuspecting consumers in a position to potentially be out thousands of dollars that they weren't planning to be out once the insurance company determines whether or not it was really truly a claim.
Mm-hmm.
If it was a claim and they're okay as far as the damage that they see and they can relate it back to something that would be covered under the policy, then they're going to pay for it, subject to your deductible. If not, then you're getting a new roof, and hopefully that company that knocked on your door's got good financing terms.
So I think the important thing with your insurance company, with your roofing company, with anybody you do business with, do your research and do your due diligence. And
if it sounds too good to be true,
when it sounds too good to be true, they're tapping into your emotion.
absolutely.
And give it time to back out of the emotion and be very subjective.
Absolutely.
Yeah.
Be very objective when you're making decisions, because a lot of people make decisions on emotion and it can come back to bite them.
Absolutely.
I like the point that you made of having a relationship with your agent.
Absolutely.
Because doing that, I mean, if you're on that really good relationship level, I mean, nobody's out there to get you. Your insurance agent is
Right.
not out there to get you. They're trying to
No.
help you. So, and I think that's very important.
Absolutely.
Yeah.
I want to say just one more thing about the hurricane deductible, if we can
Right.
flip back to that for a
Yeah,
quick minute.
let's go for it.
One thing to note, and when you think back to that being an annual deductible, when we talk about like your health insurance deductible, you wouldn't change health insurance companies in the middle of the year just because all those people have been meeting their deductible and
Right.
things like that. So your hurricane deductible is an annual deductible as long as you're within the same group of companies. So if you call a different company tomorrow and you get a better rate, but you've already paid out part of your hurricane deductible, your deductible's starting all over again with that company because they're not going to give you credit
Yeah.
for what your old company gave you. So we work with, when we talk to people today, like that policy I wrote this morning with the no personal property coverage, she doesn't really renew until September. But she got a better rate and thinks that this is a better company and is going to work better for her. So she went ahead and canceled now so that she doesn't run the risk of having to have paid part of her deductible out in the first couple months of hurricane season, especially this year. So that she's good the whole hurricane season. And one of the things that we specifically do when somebody's looking to change companies mid-hurricane season is ask them, have you filed any kind of claim? Because if it's not in your best interest to come to me right now, I'm going to tell you it's not in your best interest. Like, stay there. If you've already paid half your hurricane deductible, it doesn't make any sense for you to move at this point.
Yeah, that makes a lot of
That's
sense.
that relationship.
Absolutely.
Yeah, exactly.
There'll be many other companies that'll take your money.
Oh, sure.
regardless.
And they don't talk about that part of it. And we just want everything on the table because ultimately that's just how we do business, I guess.
Right. Well, I appreciate you coming out. I know,
Absolutely.
Bob, thank you
you.
for recommending Michelle.
Right.
I appreciate it.
Always do.
Yeah.
Thank you.
And how'd you like the podcast? How'd you
That
like
was
being
interesting. I look forward to hearing myself next time.
Yeah, me too.
No, it was really good, and definitely appreciate you coming out and sharing with us.
Thank
especially
you.
this time of year, especially when we just had a tropical storm come through. Not necessarily to us, but we felt the effects.
We did.
And,
We had
that's the
bind
third
restrictions and
the third one already, and it's June 9th, I think, today. Or something
8th,
like
actually.
that. The 8th, I don't know.
yeah,
what
we
day
had
it
some
is.
binding restrictions, and that happens too during this time of
Yes.
year. So it's one of those things we never know. You know, if you're ready to do something, we encourage you to make the decision because tomorrow's
Who knows?
who knows. Especially
It's 2020.
it's 2020.
It's 2020. All right, on that
Skipped
note.
over
right,
murder
yes.
hornets and went right into hurricane season.
All right. Well, thank you everybody for listening. And just if you have any hurricane questions, if you have any insurance related questions, be sure to just drop a comment below. You can definitely reach out to Michelle. I'll add one of her links in there. And that way you can just direct email her and contact her. All right. Thank you so much. I appreciate it.
Thanks.
Great.